Today, let me resume the lecture I left at the previous session. And here the title is Limitation of Repeated Short-Term Hedging. Right? The company is importing CD player manufactured from Japan. The company name is Winthrop. And per yen, it costs like 0.5 cents or 0.005 US dollar, right? And the forward rate of yen shows a premium of 2%, right? And in the next slide shows yen-dollar exchange rate appreciate, right? And here, what I want to show, the use of repeated short-term hedging technique does not completely insulate a firm from exchange rate exposure, even if the hedge technique are used repeatedly over time, right? So you may consider applying that hedging technique to a longer-term period for more effective insulation of the firm from exchange rate risk, right? Let me move on to the next slide to see in graph. So spot rate is blue line, forward is red one, and forward shows a little bit higher level, right? So spot rate start from here, let's say 0.005. At the end of year, it becomes 0.01, and here 0.015, right? At every time, the forward rate, right? 1 year forward rate is like this amount higher, like here, right? So 1 year forward rate, I could compute like 2% is this one. So spot price is this one, and 1 year forward rate will be that one. That's the case. Then this is 1 year forward, right? Another 1 year forward here will be computed this way. Instead of 0.005, now the starting is this is S1, so 0.01 and 1 plus 2%, right? What about there? 1 plus 2% from here, S2, I'm sorry, right? So that's for here, right? And this price is lower than S3. What about here? And this price, right? So this one is lower than S1. Then you think you hedged well, right? So let me repeat once again. S0 is 0.005, S1 is 0.01, and S2 is 0.015, and this premium is 2%, right? Spot price at today is this one. Forward price in a year, as of now, is this one, right? And the future spot price at the end of this year is this one. So this is the worst. This is kind of better or best. Or the best scenario, if you have money, you can purchase at the spot as of today, if appreciation is clearly expected. Spotlight. Now, I'm going to talk about the limitation of this hedging on another sheet. Right? The scenario is here. 0.005, 0.01, 0.015, right? After year, forward price is S0, 1 plus 2%, right? Beginning at the end of this year or beginning of next year, from that to until the end of next year will be S1 times 1 plus 2%. What about this one? This one is S2 plus 1 plus 2%. Should this is F1, I can say this is F2, this is F3. That's the structure. So at the end of this year, this F1 is less costly than this one. That's what your textbook says. At the end of next year or at the beginning of third year, this is spot price, right? This one is better. That's what this one says. But let me think another way. Your business will be continued through this first year and second year and third year. So you may consider the third option. What about buying Ford in 2 years? Ford in 2 years will become square, right? And that's for you purchasing for at this point. First year and second year. At the end of second year, the spot price will be this one. What about the price of Ford? Will be 0.005, 1 plus 2% square. What about purchasing after year? From that 1 year ahead forward is this one. This one will be 0.01, 1 plus 2%. Right? I can say this one is lowest. This one is second. This one will be third. What about this one? This is S2. This is this F2. So I have to like this one. What about this is starting from at the end of this year and through another year. This is from the beginning for 2-year period is this one. Right? If you ask me how could I know the result without in detailed computation, because I assign, right? This one is doubled, right? Doubled in terms of rate of return, S0, 1 plus another 100%, right? That become S1. That's what I designed. That S1 is here. And from S1 to S2, the rate of appreciation is another 50%, right? So that's this one. This is S2. But for here, the rate of increase is just 2%, much smaller than 100% and 50%. Right? Actually, this is for clear comparison purpose. The real life is not so simple. But let's get back to here. Now the picture become more clearer to you. If we bought a 1 year forward, the actual price for you will be this one after a year, under this appreciation scenario. Right? If we bought 2 year forward, the price, the actual price you have to pay will be this one. If we bought 3 year forward, will be this one. What about actual price is here. What about 1 year forward late? Always be here. Right? So what I'm saying, purchasing for longer period, if you're certain you can have this kind of flow, that's the best. Right? And that become the limitation of repeated short-term hedging. Right? I'm sorry. So it looks like longer-term hedging rather than repeated short-term hedging sounds better, but it also has its own limitation. As it did in the previous slide. What it did in the previous slide, I'm sorry. So real life is, when I'm speaking to you, is more than what it thought. It's complex. What I'm saying is this one. There is a risk of overhedging. So you cannot sure what will be the minimum known amount, right? You expected full hedging against full amount, but the actual realization could be just 50% of this one or 60% of this one. And for 3-year period, we cannot we cannot ensure amount to be received after a year. Then what about 2 years after, 3 years after from now on? It will become more uncertain. But you already decide 3-year period hedging for a full amount, it will become too risky. So this long-term hedging through forward strategy has a limitation. The amount in yet to be hedged further into the future is more uncertain because shipment side will be dependent on economic condition. Think of Corona-19. Who expect that? In the last year, everybody expected positive GDP. For some country, pretty much huge, even for US. But now, a lot of analysts says US will experience at least minus 20%. Who can know the future for 3 years later from now on? It will be 2023, right? If a recession occurs, right now it is happening as COVID-19 comes, Winthrop should reduce the number of CD player ordered, but the amount of yen already dictated by the forward contract that was created for 3 years, right? Or if the manufacturer goes bankruptcy or simply experiences stocks out, but the company, because he already hedged against coming 3 years, obliged to purchase yen because he already set the contract, even if shipment is not forthcoming, right? That's the limitation. So that's why, even though repeated short-term hedging sound worse than long-term hedging, a lot of companies still taking this repeated short-term hedging. But if you can ensure the future cash flow like 90% or 100%, the best choice is long-term hedging rather than repeated short-term hedging. That's what your textbook says to you through this slide. Now let me move on to another topic. Alternative hedging techniques. Right here, alternative. So it's not pure hedging, but it could be used like hedging, leading and lagging. We can adjust the timing of payment or disbursement. Let's say subsidiary is set up in UK, so its currency is pound, and its own currency expect to depreciate against invoice currency, meaning from the currency denominating for import, Hungarian dollar, or it sounds forint. On good, it will import, right? Let's say own currency expect depreciation, then it may lead its payment, right? Make the payment earlier before the depreciation of own currency realized. On the other hand, this is the opposite. If the UK subsidiary expect pound to appreciate against an invoice currency on importing good, it may lag its payment, make a payment later if it is possible, right? So this subsidiary in UK has a name, Corvallis. It purchased some supplies from Hungary. And these supplies are denominated in Hungarian currency, which is a forint, right? And what corporates expect is that the pound, its own currency, will depreciate against the foreign. Then for the payment, about the timing, which one will be better? They attempt to expedite the payment. So lead is payment. That's what this says. And in the second scenario, the corporates in UK expect the pound to appreciate against the foreign in soon. In this case, the corporates may attempt to delay its payment until after the pound appreciate, right? Then it can spend fewer pound to obtain the foreign need for the payment. That's ragging. It could be another alternative, right? Utilize the changing direction of exchange rate for favorable to you. Another alternative, cross-hatching, right? Cross-exchange rate. When you do not consider US dollar, that's the cross-exchange rate, right? Hedging by using a currency that serves as a proxy for the currency to which your subsidiary MNC is exposed. A proxy, using proxy. So the target currency is not available to you. That's why you think about the proxy. That's for cross-hedging, right? But for proxy, so a firm cannot hedge a specific currency because it is not provided from the market. It can use a forward contract on a currency that is highly correlated with the currency of the concern. Let me speak in Korean. 제가 작년에 아제르바이잔에 갔는데 아제르바이잔에서 생산하거나 수입하는 사람들은 아제르바이잔 통화를 포워드 거래를 하고 싶지만 그런 유명하지 않은 나라의 포워드는 없어요. 그래서 아제르바이잔 사람은 어떻게 하냐면 옆이 터키고 터키가 상대적으로 크거든. 터키하고 유로의 포워드를 사용하는 수밖에 없어. 그게 크로스 해칭이야. 지금 한국은 한국 돈하고 외국 돈하고가 돼. 예전에 어떻게 했을까? 한 30년, 20년 전에는 그렇게 우리도 크로스 해칭을 했을 거야. 왜냐하면 한국물에 대한 선물한이라는 거는 2000년 이전엔 사실상 없었거든요. 여러분이 물론 아기 때겠지만. Now let me talk about currency diversification. Diversification, that's a concept you learn in investments class. We can apply that to our international financial management. So diversification itself reduce exposure by how? Diversifying your business line among numerous countries. Right? Then the future inflow in numerous foreign country, in numerous foreign currency will become more stable as you diversify yourself. Right? If those foreign currency received are not highly positively correlated. What's the extreme of highly positive correlation? If the correlation coefficient becomes 1, what's the range of correlation coefficient? Normally less than 1 and should be greater than or equal to -1. What's the statistical independence in terms of value of correlation? Should be 0. Right? So within this range, perfect independence is this one. What's the highly positive correlation and the maximum of that is 1. Then what's the other? The maximum negative correlation is -1. Once you achieve this one for your investment portfolio, that's the best case for the diversification. In reality, it's not easy. I think it would be almost impossible. The reason is that lower positive correlation or negative correlation can reduce variability or variation of dollar value of all foreign currency inflow, right, is the reason for diversification. On the other hand, if the foreign currency were highly correlated with each other, diversifying among them would not be effective way. to reduce the risk. That's still the limitation of currency diversification. So what do we have? Oh, right. So we could think about hedging long-term transaction exposure. If you want, you can go to your textbook, but in my class, I'm not doing that. So I'd like to finish chapter 11 at this point, and I want to move on to chapter 14. We will continue for today's lecture. So move on, chapter 14. Now, I'm going to introduce you to chapter 14. Chapter 14 is nothing more than capital budgeting. This is capital budgeting. Why this is not working? Oh, sorry, I have to use this one. Oh, I see. So this is it. So this is capital budgeting. Let me translate that into Korean. This is 자본 예산. And for us, we are talking about MNC, so multinational capital budgeting, because this is international financial management, right? So basically, if you knew capital budgeting, the contents in this chapter is not new or not hard. So what I'm going to deal with this is capital budgeting. So you consider to spend money for a certain project, right? And for that project, you have to make the outlay. For that outlay, another concern is whether it is worthwhile or not, right? Worthwhile or not, the outlay, it is a cost of project. And you will think about return from that, the benefit, right? But the dilemma, outlay should happen as of today, as a sunk. But the profit or the benefit will come continually in or over time in future, like 3 years. So you have to take into account the cash flow generation, let's say in future 5 years, right? The outlay happens as of today. So for the future cash flow in future, you have to estimate on the amount of it. And secondly, you have to discount the cash flow. And you have to sum that up and compare the present value of the old cash flow in future, compare that benefit to the cost you are making right now. Right? That's the essence of capital budgeting, whether to take this project or not. And that project should associate a certain break cost. So MNC evaluate its international project by using CB, capital budgeting, and multinational capital budgeting. It compares the benefit and cost of the project. Given that many MNCs spend more than how much? 100 million per year dollars on international project, then the CB, capital budgeting, is critical. Many international projects are irreversible. I imply that in sunk cost, irreversible, cannot be easily sold to other corporation at a reasonable price. You can sell it, but you have to discount hugely for the quick sale or investment. It is no benefit or attractiveness to another investor other than you. So proper use of MCB can identify the international project whether it is worthy of implementation. Now, object of this course, compare CB analysis of MNC's subsidiary versus its parents. By the way, this textbook is written from parent perspective. Whether this implementation is worthwhile or not could be evaluated from subsidiary perspective, but at the beginning, the outlay comes from parent. So I think it is more worthwhile to us, right? We want to do CV analysis from parent's perspective, right? For the same thing, whether to do or not, from your parent's perspective, from your own perspective, the decision could be different, right? That's what I wanted to emphasize here to you and demonstrate how MCB can be applied to determine whether an international project should be implemented or not, right? Actually, that's the second thing. First thing, we want to set our perspective, as I said, from its parent perspective. And by this demonstration, we will determine this project would be worthwhile to implement or not. And lastly, I'm going to explain how the degree of riskiness of international project can be assessed, right? So before I move on, I guess this is it? Oh, I see. It's okay. So I don't need to do erase. So we will deal with this lecture through example. So actually I've never done PDF and I want my hand doesn't even my hand this is my hand touch writing. I don't want my hand to write for PDF. What can I do? The problem hand should write. I see. What about this one? So here yellow doesn't work that well. Then I'll go back to this one. Or can I use this one? Yes, I think so. So the company name is Spartan. Is about to consider the implementation or development of subsidiary in Singapore. That subsidiary will manufacture and then sell the item is tennis racket. Manufacture the tennis racket in Singapore and sell that locally, meaning in Singapore. This project will end in 4 years. So your future estimate on the cash flow up to 4 years. All relevant information is follow. How can I move on this one? Now I came back. I roughly start understand the mechanism. This path is working for PDF file. So here, initial investment. So this is it. Initial investment. An estimated 20 million Singapore dollar, right? That's the size of initial investment, which includes fund to support working capital. In Korean, 운전자금, working capital. Let me speak in Korean. 운전자금의 반대말은 시설자금이에요. 여러분 은행가 많이 쓰겠지만 그건 내가 지금 영어로 모르겠네. Facility capital인가? 모르겠어요. 어쨌든 운전자금하고 시설자금 대체 슬라시 서로 다르고 표기도 다르더라고. Fund, right. This working capital would be needed for the project. Given the existing spot rate of 50 cents per Sing dollar, right? The US dollar amount of this initial investment is how much? Just 10 million US dollar, right? And the cost of Sing dollar is 0.5. The value in Sing dollar, this 10 million divided by 0.5. It will become in Sing dollar 20 million, right? That's the size of initial investment. And the price and demand schedule all along with the cost. So you have to make the estimate on those. So estimated price and demand schedule and variable cost for material, for labor, for office per unit during each of the next 4 years are consolidated and shown. in later you will see like this one. That's there is a demand and price, variable cost, and total expense, right? So the problem to us, I have to move this one. So I have to resume this one. So furthermore, the expense of leasing office space millions in dollar per year. Other annual overhead expenses expect to be another 1 million Sing dollar per year in each of 4 years, right? And the depreciation. The Singapore government will allow the subsidiary, Spartan subsidiary, can depreciate the cost of a plant and equipment at a maximum rate of 2 million Sing dollar per year. So depreciation become another cost. And the good thing for depreciation, you load under the title of depreciation and you can save the cash. That's another good thing for depreciation in your accounting lecture, right? Which is a rate the subsidiary will use for later. So they stock in cash. Now the tax. The Singapore government will impose 20% tax rate on income. In Korean, 소득세, right? So every income the subsidiary is generating after a year or for each year, the government will tax 20%. In Korea, this tax rate is 23%. For OECD country, roughly average, I guess, 18%. In addition, it will impose 10% withholding tax on any fund limited to the parent by the subsidiary. We call it withholding tax in Korean 원천징수세. Let me speak in Korean. 자, 그러니까 외국에서 장사해서 돈 벌기가 쉽지 않겠죠. 소득세가 부과되고 또 자기 나라로 가져와도 원천징수세가 부과돼. 그러면 FTA 이런 걸 하고 외국 기업을 자국에 유치하려면 뭐래? 이 소득세를 면제해 주겠다고 하지. 또 원천징수세 본국에다가 보낼 때도 면제 주겠다고 해. 그런데 사실은 우리나라도 그렇겠지만 이거는 면제를 사실 잘 안 해줘. 왜 그런 문제가 생길까요? Please allow me to speak in Korean like 1 or 2 minutes. 자, 외국인 투자가 들어올 때는 달러가 들어오니까 환율이 어떻게 되겠어? 우리로 얘기하면 절상이 되지. 좋아. 근데 얘네가 본국에 다시 빼갈 거 아니야. 우리나라 주식시장에 들어왔다 나가는 거랑 똑같은 원리예요. 빠져나가면 어떻게 돼? 원화가 절하가 되지. 그럼 경제 위기란 소리가 들릴 거 아니야. 개도국들은 다 한국하고 똑같은 문제가 있거든. 그러면 매번 빼가는 걸 허락하느니 허락 안 하는 게 좋겠죠. 그걸 가지 말라고 하겠어? 위드홀딩 텍스를 높이는 게 좋겠어. 위드홀딩 텍스를 높이면 얘가 안 가는 것도 있지만 빠져나가려는 돈에 지금 10%라고 하는데 사실 더해. 30%도 하고 중국은 50% 할 수도 있어요. 그게 정부에 뭐가 돼? 세수가 되지. 정부의 재정이 좋아지죠. 자, 이게 우리 쪽에서만 이렇게 얘기할 게 아니고 사실 전반적으로 생각하면 굉장히 이게 여러 가지가 얽혀 있는 문제더라고. 아까 이제 제가 세금을 얘기했는데 사실 디프리시에이션도 있어. 디프레이션 감가상각을 굉장히 많이 인정을 해줘. 그럼 어떤 일이 생기는 줄 알아요? 감가상각 비니까 받은 수입에서 코스트로 빠지니까 순이익이 넷인컴이 주니까 텍스 낼 게 줄어들잖아. 그럼 텍스 레이스를 낮춰주는 것도 있지만 뭐라는 게 있어? 디프레이션을 높여주는 것도 있지. 그 다음에 디프레이션을 높여주면 이게 지금 감가상각비로 빠지지만 계정상 빠지는 거지 실제 지출하지 않았잖아. 그럼 숨겨진 돈이 생기잖아. 그걸 갖고 기업주가 또 뭘 할 수 있지. 그런 베네핏도 있지. 한국도 이런 걸 다 외국인한테 특혜를 줘서 기업들이 들어오게 했고, 여러분이 해외 사업할 때도 수업 시간엔 그냥 지나가는 항목이지만 이걸 어떻게 조정하느냐에 따라서 그 나라에 내가 들어갈지 말지를 해. 그래서 이런 디프리시에이션으로 돈을 빼내고 그 다음에 정부는 원천징수세로 또 때리려고 그러고 텍스도 컷을 주면 수익이 안 날 게 수익이 나기도 하고 이런 것들이 다 계산을 해서 여러분이 어디에 들어갈지가 결정이 됩니다. Now let me get back to the lecture. So US government, right? The parent company is in US. And for that, the parent company, US government, will allow a tax credit on tax paid in Singapore. We call it double tax avoidance agreement between two countries. For the kind of FTA contract, each government, they signed on allowing tax credit. So double tax cannot be occur. So for the firm, they can avoid double tax through this contract. Let me speak in Korean. 자, 여러분 크레딧을 갖고 면제라고 했는데 이건 뭐냐면 면제는 맞는데 사실은 어디 하나에 냈지. 돈을 냈잖아. 싱가포르에 냈잖아. 그건 네가 냈으니까 그걸 나한테 크레딧을 주겠다는 건 뭐야? 네가 나한테 안 내더라도 거기서 낸 걸 내가 받은 걸로 하겠다는 거예요. 영어의 크레딧은 완전 공짜는 없어요. 네가 뭘 한 게 있으면 아 그래? 그걸 take into account 해줄게라는 크레딧이에요. 그래서 여러분 여기서 받는 성적도 영어로 뭐냐 그러면 크레딧이라고 그래. 여러분들이 시험을 몇 점을 받아서 잘했고 뭘 했으면 아 그걸 보고 너를 크레딧을 주겠다 하는 거예요. 대차대조표에서 크레딧이 뭐예요? 부채하고 자본이잖아. 없는 거야 아니면 진짜 바로 한 거야 스탁을 이슈한 거야. 그걸 크레딧이라고 해. 그 큰 타이틀이 크레딧이야. 그렇죠? 그게 아마 대변이 되는 것 같은데 차변이 데빗이죠. Therefore, earning limited U.S. parents will not be taxed again by the U.S. government. Why? For this remittance, right? Already this subsidiary paid withholding tax. So tax is already once paid, then allow tax credit, meaning U.S. parents will not tax. Now think about another one. Might be this Singapore may not impose withholding tax. Then under double tax avoidance agreement, U.S. government, whether the government can levy tax on this remittance to parents or not. The right answer, the parent should pay tax to the U.S. government because they have nothing eligible for tax credit because they didn't pay tax for this remittance. But once the parent, subsidiary, pay the withholding tax, then the U.S. government can levy on that. But let me clear on that. But to that extent, the subsidiary pay the income tax. For that one, this U.S. government still allow tax credit. So I was talking about two different type of tax, right? For this income tax, this double taxation avoidance agreement work for the parents. But for this withholding tax, if the subsidiary didn't pay that, then under double tax avoidance agreement, still U.S. government can levy the tax on the remittance. Now, limited fund, that's a remittance, right? Let me talk about this one. Limited fund. The Spartan subsidiary planned to send all the net cash flow received back to the parent's firm at the end of each year. The Singapore government promised no restriction on the cash flow to be limited, sent back to the parents, but does impose a 10% withholding tax on any fund sent back or limited to the parent. That's what this Singapore government is taking. That's a policy of Singapore government. Now, seventh item is salvage value. Salvage value. In Korean, 잔존가치, 청산가치. Let me speak in Korean. 여러분 잔존가치, 청산가치도 굉장히 중요합니다. 제가 영어로 하기 전에 이 얘기를 하는 이유가 뭐냐면 지금 중국의 한국 기업들이 들어가기 싫어하는 이유가 투자해서 10년이면 엄청나게 돈을 벌어. 그런데 그 원래 처음에 투자했던 돈이나 돈을 벌면 다 배당을 하진 않거나 다 리미트를, 중국 같은 경우는 특히 리미턴스에 대해서 엄격하거든. 거기에 잉여금, 그 다음에 자본잉여금으로 쌓여있는 걸 한국으로 가져올 때는 다 뺏어. 청산가치에 한마디로 제로를 해주거나, 뭐 제로는 아니지만 사실상 그런 일들을 해요. 제가 지금 이게 녹화가 아니면 좀 더 재밌는 얘기를 해주겠는데, 법상으로는 가져갈 수 있게 하는데 사실상 받을 수 없게 거기서 공산당이나 국무원이 조정을 해서 청산가치 거의 제로가 돼. 그러다 보니까 우리나라 업체들이 요즘 들어가는 걸 상당히 꺼리는 이유가 되기도 합니다. Now let me speak about salvage value. Singapore government will pay the parents in Sing dollar 12 million to assume ownership of subsidiary at the end of fourth year. Right? Assuming ownership of the subsidiary, who will assume? The Singapore government take the control of that. Meaning, the subsidiary will sell the ownership of the plan to the deliver ownership of the plan, deliver that to the Singapore government, and Singapore government pays for the price of that. That's the salvage value, and the salvage value is estimated like 12 million. That's what this seventh item says. Assume that there is no capital gains tax on the sales of subsidiary, right? For simplicity, we assume there is no capital gain tax. But for the lot of investments item, capital gain tax is no more, right? Exchange rate. The spot exchange rate of Singapore dollar is 50 cents, 0.5. And forecast, estimated exchange rate for all future period in 4 years assumed to be, oh, this is so simple, the same 50 cents. But Sing dollar could appreciate like 0.6 or could depreciate until 40%. That's possible. Now, required rate of return in Korean, 요구 수익률. Spartan Inc., this incorporation, so Spartan Inc. require 15% return on this project, considering the degree or extent of business risk. Right? Actually, the borrowing cost for Spartan company itself could be 10%, or for the parents' borrowing cost could be 5%. But for across the project item, because each project has more riskiness than the credit worthiness of the parents or credit worthiness of subsidiary. So you have to compute, you have to make an estimate, the proper one for each project. And in this case, the required rate of return is computed at 15%. Right? Now let me summarize the assumption for this investment. Up until now, I just illustrate the thing we have to consider, right? From here, I'm going to talk about in detail the number we have to bear in mind for each item I told you, like initial investment, how much it? What's your estimate on the price and demand in local market? What's the associated cost, item by item? What's the tax law? So summary, initial investment in Sing dollar, it is computed like 20 million. By the way, it costs in US dollar 10 million. Right? And price consumer demand. So I assume this company will work in 4 years. For the first 2 years, right? Demand is estimated 60,000. And from the third year, the market expanded roughly like 50 or 40%. So now it expanded to 100,000, right? And the same thing for the last year. But the price for the item this company is manufacturing per unit, they can sell at 350 for the first 2 years, and now they will increase the price by 10 Sing dollar more and additionally $20 more for the last year. So total revenue you can compute like this size volume of demand times per unit price. The same thing, 100,000 times, right, 360. For the last year, this one. Now, what's the associated cost? There is a variable cost and fixed cost. Fixed cost is the same for across 4 years, 2 million Sing dollar. Variable cost for the first 2 years, for each unit, $200. For the third year, the cost itself is rising. Maybe that's why your sale price is increased by $10 more than the first 2 years, right? And the fourth year, cost become $260. Then what's the margin? You can compute 350 minus 200 for the first 2 years. Now 360 minus 250 for the third year. I'm sorry, for the 왜 이렇게 많이 갔죠? Right. For the last year, the margin will be 380 minus 260. Tax law, we assume 20% income tax. For the withholding tax on whatever limited money, 10%. Exchange rate, we assume 50 cents flat for entire 4 years. Salvage value, 12 million. Required rate of return is 15, right? So that's the summary of the environment and MPB, right? For today, let me stop here. We can resume from here on coming Thursday.